Hi guys, how are you? So many aspirants requested us to record these videos in English, and it makes sense also since we have a section of English in phase 1 and phase 2 both. So I guess there won't be any problem to any aspirant with videos in English language. So let's start the today's topic, which is Monetary Policy Committee. And before watching this video, please do watch our previous two videos. That is one on monetary policy and second one on monetary policy instruments and tools. So let's get started. So an expert committee to revise and strengthen the monetary policy framework was appointed by RBI in 2014, and the committee was headed by RBI Deputy Governor of that time, that was Urijit Patel, who later became RBI Governor also. So committee recommended that RBI should adopt a new index for anchoring the monetary policy, and that index was Consumer Price Index. Another suggestion of committee was that monetary policy should target the inflation at 4% with a variation of 2%, either plus 2% or minus 2%. So inflation target should lie between 2% and 6%. And one of the major recommendation of the committee was that the monetary policy decision making should be given to a monetary policy committee. So consequently, government accepted the recommendation of this committee, and RBI Act was amended to insert Chapter 3F, and Section 45ZA to 45ZO was inserted to introduce the Monetary Policy Committee. And so let's move on to see who are the members of MPC. MPC means Monetary Policy Committee. There are 6 members in the MPC. 3 are from RBI and 3 are from government. From RBI side, Governor of RBI is the chairman of MPC. Second one is Deputy Governor of RBI, who should be the in charge of Monetary Policy Committee. And third is another officer nominated by RBI Central Board. Moving on to government nominated members. At the time of recording the video, Dr. Ravinder H. Dholakia was one of the member. Dr. Chetan Ghate was another member, and Dr. Pamidua was another member. So these 3 nominated members from government side are appointed for 4 years. So moving on, let me take your 30 seconds to tell you about our new Chakravyuah test. So this test series shall contain 10 ESI tests, 10 FM tests, 10 tests of phase 1 general awareness. As a part of test series, we will give you some PDFs which contain important information on government schemes, reports and committees and many other information. We have kept the fees very low, that is rupees 1000 only. And to subscribe the test series, you just have to do WhatsApp on 789114145793. So moving on to next topic, that is inflation targeting framework. So in 2016, RBI adopted the inflation targeting framework. And according to this framework, inflation target is set by Government of India in consultation with RBI. And this inflation target is set every 5 years. Last time in August 2016, when this MPC was constituted, CPI target was set to 4% with tolerance limit of 2%. So accordingly, CPI should lie between 2% and 6%. So according to this framework, MPC sets repo rate as its policy rate, and whenever you see RBI comes out with a monetary policy statement, it always tries to focus on repo rate. So repo rate is the policy rate of inflation targeting framework. And policy rate is set after assessing the current and evolving macroeconomic situation in the country. And weighted average call rate is another rate that RBI uses to manage day-to-day liquidity in the system. So RBI tries to adjust and manage the weighted average call rate around the repo rate. RBI Act was last amended in 2016 to give statutory basis to the implementation of this inflation targeting framework. So moving on, what if RBI is not able to meet its CPI target? It is also specified in RBI Act. So what it says is that if RBI fails to meet the inflation target for 3 consecutive quarters, and that failure means its average inflation for 3 consecutive quarters is greater than upper tolerance level, that is 6%, or average inflation for last 3 quarters is less than the lower tolerance level, that is 2%. In that case, RBI has to submit a report to the central government which states the reason for failure to achieve the inflation target and remedial actions proposed to be taken by RBI. And it also give an estimate of the time period within which the inflation target it will achieve. So moving on to the meetings of MPC. The meeting of MPC should happen at least 4 times a year. Generally, you see these meetings are happen every 2 months. The quorum of the MPC meeting is 4 members. That is at least 4 members should be present. Then only the meeting can be conducted. Each member of MPC has one vote. Voting means in the event of contradiction on any topic or any decision, MPC members can cast the vote to arrive at decision. In the event of equality of votes, the governor has a second or a casting vote. And after every such meeting, the MPC has to publish its decisions. That is why RBI always publish its monetary policy statement on its website. Next, moving on to the monetary policy report. Monetary policy report is published by RBI once in every 6 months. This is mandated to RBI as per section 45ZN of RBI Act. There are two things in this report that RBI has to give. First is to explain the sources of inflation. Secondly, it has to give a forecast of inflation for 6 to 18 months ahead. So guys, that's it for today's video. I hope this video proves useful for you. And if you like our video, do click on that like and share button and click on the subscribe button to subscribe our channel. And I've given a videos playlist in the right side. Do click on it to watch more useful videos. And there are some questions that are put in the comment section. Do give their answers. And we'll see you soon with another video. Bye bye.